A closer look at the state of SPACs. Your next guest is seeing fatigue in the market, which may be prone to volatility as these blank check deals start to mature. With us now is Jackie Reeses, CEO of Post House Capital, also a board member of Bill Ackman's SPAC, Pershing Square Tontine Holdings. I mean, this is a fantastic move for this market, Jackie, in terms of special purpose acquisition companies. Do deals need to get done imminently for these SPACs to at least maintain the momentum for the overall market?
Sure. Well, let's just talk a little bit about what's happening in the overall market. I think you used the word fatigue and digestion, both good words. We've certainly seen a change in the tone of the market for high growth equities broadly since the third week of February. It's largely driven by the revised outlook of interest rates and also a reflection of the growth stock run up that we saw last year, which was huge. And that volatility is likely to continue for a while as the equity markets digest relative values of growth versus value. That is not unique to the SPAC market. You also said SPACs have seen record levels of IPOs. We've had as much SPAC issuance in the first 2 months as we did in all of last year. And so that's a dynamic that can't go on forever. It doesn't mean that there won't be issuance by high quality SPACs. The market has an incredible way of reinvigorating when a deal gets done that the market likes.
So I mean, Jackie, does it bother you as a SPAC investor, as a SPAC sponsor, as somebody who's involved in these types of these special purpose acquisition companies, as the board member of a large one right now? Does it bother you to hear all of the chatter, the speculation about what you could be doing? What is it that you want to do? What is it that drives your value? What exactly do you have to do then from a SPAC perspective to maybe either tune those voices out or at least give them something to nibble on as you look for that big deal?
Yeah, it would be inappropriate for me to speak as a board member of any SPAC. So I'll speak broadly as a market investor and an observer on the market. When people look at doing SPACs, they look at the type of research that they should be doing as an investment, similar that they would in a private equity deal. And a buyer needs to take a thesis about the broad market and then believe that there's fundamentals within the company that are attractive for the future. Beyond that, there's a significant amount of diligence that gets done, whether it be business or legal or structure or accounting due diligence that's needed. And I think when you have a really strong M&A target and an opportunity to take a company public, the fundamentals will shine through. And I think that's what the market is observing. When you have a good deal, good deals trade well in the marketplace.
Leslie Picker, let me turn to you really quickly here as well. What exactly do you think is driving some of that slowdown in momentum for these special purpose acquisition companies?
I think Jackie's point about, this being a market that tilts toward value versus growth is a good one. You're seeing a lot of these SPACs merge with companies that are pre-revenue, and they're giving financial projections 5 years down the road where they would look like a company that's, going public a traditional way. That's the epitome of about as much growth as you can get at this point when you go from maybe 0 to 500 million in 5 years. That said, I think there's also this realization that there is so much supply coming to the market. And once people start realizing, potential lockups associated with some of these private placements they've been engaged in, some deals that may have not turned out as well as people had hoped. Lucid and CCIV come to mind. That's Churchill Capital 4. That deal traded down when it was announced. All of those things are creating jitters that can impact sentiment and spill over into the broader SPAC landscape.
Shepard Smith here. Thanks for watching CNBC on YouTube.